How can I still buy a home as interest rate rises? Stay tuned. Hey guys, my name is Sandy Sills. I'm a licensed realtor here in Central Florida area. And today we want to talk about how can I still buy a home as interest rate rises. This is a big topic. A lot of people are talking about it. It's in the news, it's in the media. People are saying the market is going to crash. People are waiting for the market to crash. There are people that could have bought a home in 2020 or 2021, but they were waiting for the big foreclosure flow because everyone is thinking that everything is going to go back to 2007, 2008, 2009, which I was a licensed realtor and I actually lived that market. But the thing is, guys, we're in an economy right now that we have never seen before. We've never seen COVID before. COVID came. COVID is still here. We have no idea what's going to happen to COVID. We have no idea what's going to happen to the market. The feds are raising the interest rate because they're trying to stabilize inflation. Everything is at an all-time high. A lot of people are self-employed now. They're doing their own thing. They don't want to work. So we have a shortage of workers in the workforce. There are way more, self-employed stuff going on. We have Toro, we have DoorDash, we have Uber Eats, we have Uber, we have Lyft. We have all these different self-employed things that people are doing. So people are actually either doing them as a full-time gig or they have a part-time job and they're doing their own self-employed thing. So that kind of affects the market a whole lot. So what does that mean? That means that people are no longer dependent on a W-2, right? They're no longer depending on working a regular job to get a W-2 form. So the banks are coming out with more and more programs to help a self-employed person buy a home. If you're self-employed, you're called a 1099 worker. So you have a W-2 worker, and that's the person that works for a regular job. The job takes taxes out of their salary each week or whenever they're paid, and they get a W-2 at the end of the year. And that's what they normally use to determine your own buying power to buy a home. If you're self-employed, you get what is called a 1099. Some self-employed people will pay their taxes quarterly. Some of them will wait until the end of the year, and you get to deduct your expenses before you pay your taxes, right? So it's two different scenarios here. So we have more and more people like that coming up on the market. So how can I still buy a home as interest rate rises if I'm self-employed or employed? How does that scenario work? Well, the thing is, right now, this minute, interest rates are still going to continue to climb. So if I was in the home buying market, if I was looking to buy a home, I'd want to buy a home sooner than later. Now, I'm not just saying that because I'm a real estate agent and that's how I make my living. I'm saying that because that's the reality of the market. The interest rates are climbing, and back in 2020, interest rates were at an all-time low, but nobody wanted to buy because nobody knew what was going on. So there were people that was already in contract when COVID hit and they had to close. Some people were able to close. Some people could not close on a home because they lost their job, right? And then we have 2021. Interest rates continued to be low. The market got really crazy, right? It was a serious seller's market and still is in our area. But the thing about it is, if you're looking to buy a home and you're in a seller's market and the market is so aggressive and every time you put an offer and it's not accepted, especially if you're a first-time home buyer and you're doing a FHA loan or a VA loan, you're putting less than 20% down. In our area, you're going to be competing with people buying cash. There's a lot of cash in Central Florida, right? So a lot of people come to buy cash because they're relocating to our area. So Florida is more of a relocation kind of state. So a lot of people are going to sell their home in wherever they live and they're relocating here. Or they're buying a vacation home here, so they're pulling equity from another home. So first-time home buyers in Central Florida, is kind of hard for them because they're competing with other people coming in or people who are putting more than 20% down. That doesn't mean you can't buy a home. So how do we combat that? How do we find our buyers a home in this crazy market with interest rate rising and we put all these offers in and they're not being accepted? Well, what we do for our clients, we find off-market properties. This is how we compete with the rising interest rate. So our buyers come to us, they're like, hey, I really want to buy a home. I'm pre-approved for this amount, but I don't know what's going to happen because obviously as interest rate rises, so will your home buying power. So at 2%, you could buy more home. At 4%, you could buy less home. And at 6%, you could buy even lesser home, right? So that's the thing. And As the interest rate climbs from 2 to 4 to 6 to 8, God forbid it gets to 8, but as it climbs, then your monthly payment will be more. So if you're buying a $300,000 home and your interest rate is at 2%, you're going to pay a lower fee than if you buy the same $300,000 home, but the interest rate is now at 4%. And when I mean fee, I mean monthly payment. Your mortgage monthly payment will be more. So the higher the interest rate is, even if the home is priced at the same amount of money at 300,000, let's say, or four. Let me just say 300,000. It's hard to find a home for 300,000. Let's say the home is priced at $400,000. At 2%, you're going to have a lower monthly payment than at 4%, right? And an even higher monthly payment at 6%. As the interest rate rises, your monthly payment is going to increase. Well, how can we combat that? Maybe you could put more money down. And it depends too, because it doesn't make it go too much lower if you're putting, let's say, $5,000 more. So let's say you're putting 10% down. If you're putting 10% down and you figure out, you know what, I might want to put 20% down and you can afford to do 20%, then that will definitely give you a lower monthly payment, because even if their interest rate is high, you won't have a PMI. What's PMI? Private mortgage insurance. Why do I have to pay PMI? Whenever you put a monthly payment down of less than 20%, the bank wants you to insure your mortgage, right? So the mortgage loan itself has got to get insured, and that's what's called a private mortgage insurance. Once you build more than 20% equity in the home, you could call the bank and they'll do an appraisal and they will drop the PMI. Some banks will, some banks won't. There's another story about that, but that's for another time. Even though I'm talking about mortgages and loans and PMIs and all this stuff, understand I'm a licensed realtor. I'm not a licensed mortgage broker or lender. However, we do work with quite a few preferred mortgage lenders and brokers, so we do have some knowledge of the mortgage market. But for you to get precise and understand exactly how the mortgage world works, you want to talk to a licensed broker. Okay, so let's say you're thinking of buying a home, interest rate is rising. Can I still buy the home? I'm pre-approved at this point for $400,000, but that was 2 months ago before the interest rate rose. Can I still buy the same price home? You got to talk to your lender. The lender will let you know based upon your debt to income ratio, based upon your based upon your down payment, if you're still qualified for $400,000. Some people may not qualify for the same loan amount 2 months ago because of the increase in interest rate. So how do I buy a home quicker or sooner than later? Because we don't know, how high these interest rates are going to go. How do I buy a home sooner in this crazy seller's market, right? If you're in a seller's market, you have to work with a realtor that's going to be able to find you off-market or unlisted properties. What are those? I've never heard of those before. I thought, you can only buy homes that are on the market. No, you could buy any home. Any seller that is thinking of selling their home or want to sell their home, you could buy a home from them. How do we find these sellers? We do that by asking our buyers, hey, what communities do you want to live with? What developments do you like? Where do you want to live? They tell us that, and we go and contact the homeowners in that area and say, hey, we have a pre-approved buyer. Well, first of all, we determine if the buyer's pre-approval amount matches the community. Let's say we have a community and the homes in that community is selling for $400,000, but our buyer is only pre-approved for $300,000. Obviously, that's not going to work, right? So once we determine that the pre-approval amount and the community matches up with each other, we go and we find the homeowners in that community, we contact them, and yes, we have their contact information, and we say, hey, we have a home buyer, they're thinking of buying in your community, are you thinking of selling? Maybe 4 or 5 people of 500 homeowners might say yes. We're willing to take that chance because we only want to find one home for that one buyer. We may have more than one buyer looking in the same community. Great. If we find 4 to 5 homeowners, that'd be great. So once we find a homeowner and they're like, yeah, I'm thinking of selling, they may have some stipulation. They might say, I'm thinking of selling, but I got to wait for my child to graduate high school. I'm thinking of selling, but I'm going to relocate in the next 3 months to California. Whatever they say, as long as the buyer is able to work around that, that is fine. So we go out, we preview the home. I can't talk this morning. We preview the home, and then once we think the buyer that will meet our buyer's criteria, then we have the buyers look at the home. Now, what if the buyer doesn't live in our community? What if they don't live in Florida? We have a lot of buyers that do not live here. They're looking to buy here, but they don't live here. Then we will do a tour video, a very thorough, complete video of the property We show you up the road, down the road, what's behind the property, what's beside it. We go inside, open the closets, the cabinets, the appliances. You get to see everything. And then we send you that video with a YouTube link so you could look at the video. And if that's a home that you think you would like, then boom, we connect you with the homeowner and we get that home sold. So you could still buy a home as the interest rate rises, but you can't wait because we have no control of the interest rate, what they're going to do. So if you're thinking of buying, now might be the time. Give us a call. We will connect you with our preferred lender. They could tell you what you're pre-approved for, what your monthly payment would be, and we could go out and find your off-market or unlisted property. This is going to be the new world. If the real estate market continues to be the same, and we have so few inventory and so many home buyers in the market, then we're going to have to learn to find off-market properties. This is not typical, but we have to do untypical stuff. COVID wasn't typical either. So when the market shows us something that's not typical, we have to put on our creative hats and find out, hey, how can we still help our clients? And in this market, the way we help our clients is to find off-market or unlisted properties. We have to go out and find homeowners who are thinking of selling, but their property is not on the market as of yet, and we connect them. We connect those homeowners with our home buyers. That way, there's no bidding war. We determine market value. We're still giving them market value. Okay, think about this real quickly because I wanna end the video quick. But think about this. Zillow a few months ago was buying homes for cash. OfferPad and Open Door are still buying homes for cash. How does that work? They advertise, hey, we'll buy your home for cash. The homeowner call, hey, yeah, I'm thinking of selling my home. They come out, they say, okay, the value of your home is $400,000. We're going to charge you a 15% convenience fee. So we're going to subtract 15% from the $400,000 and we'll give you this in cash. Does that work? People are saying yes. And that is way more. The convenience fee is way more than what a realtor would charge a homeowner to sell their home. So this is how we find off-market properties. So if you are thinking of buying a home and you realize interest rates are rising and you're really serious, give me a call, send me a text, 407-791-4713. I will help you find a home sooner than later, and I will not get you caught up with a bidding war. Yes, we also open you up to all the homes on the market, the MLS, Zillow, and Realtor.com. But what we find work best is when we find an off-market property that fits one of our home buyers. We also work with builders, and builders also have new construction off-market properties. Again, this is Sandy. Thank you so much for listening. I'll see you in the next video.